Business, finance and investment news. MoneyWeb Now with Simon Brown on The Money. Also available on podcast.
I'm chatting with Richard Willis. He's Etienne Group acting CEO. They had results out for year ending March. It saw revenue up 20%. Headline earnings per share at 0.87 cents a share. That was up 1,171%. Richard, appreciate your time today. I want to delve into numbers. Before I do, a quick first question. The sale of Law Trust for $245 million. Is that still on track?
Yes, it is, Simon. There are two events that need to take place. We've got a shareholders meeting, a general meeting on the 14th of July for shareholders to vote in favor of the deal. Mm-hmm. And then we obviously sit and wait for Competition Commission approval, which, the application went in April. There's generally a 45-day period in order for them to rule. They've asked for a slight extension because they're dealing with some questions.
Sure.
And we're hopeful that, that will go in our favor.
I ask because market cap of Etienne, 220 million. And then my question to you is, assuming it goes through, plans for the proceeds from the sale?
Yeah, so we're obviously thinking long and hard about it. Part of the shareholder value creation strategy is to unlock value. As you know, these holding companies often trade at a discount to the underlying sum of the parts. Etienne's market cap went right down to 65 million about a year and a bit ago, and we knew that we needed to do something. So the first sale of Law Trust has taken place. We're likely to tender the other two businesses for sale and then ultimately probably try and delist the group in due course. What we're going to do with the cash is we obviously need to pay down a term loan that we owe Nedbank, around 24 million. And then what we're going to be doing is there's some growth initiatives that we need to look at supporting within some of the operating entities. And then there's obviously a healthy dividend stroke return of contributed capital that we're busy assessing, to try and deal with.
Over the past year, you've been in a process of restructuring essentially three divisions: Etienne Connect, Create, and Secure. Secure is the Law Trust part. Is this process you've redone the restructure? You're comfortable with where they all fit and sit at this point in time?
Very much so. Each of these businesses, whilst they operate in the digitization space, they generally operate in their own markets. There was a thought train a couple of years ago to try and find an end-to-end technology solution across all businesses, but you and I know that that's generally quite difficult to achieve. So the underlying businesses all operate very well amongst themselves, and we felt that the most appropriate way to unlock shareholder value is to possibly look at selling those individual businesses because, as you know, you just have to look at the market cap and the value that we achieved for Law Trust that, there's significant value to be unlocked.
Yeah, and you operate, if we look at the sort of the two, the Create, Create is design manufacture. It's advanced technology, it's mining, it's defense, it's IoT. And if I look at Digitize, it's also got some IoT in there. But my sense of it, and I've been chatting with the group over the many years of the listing, is they are kind of different in senses. Yes, they might both be IoT, but they're in different industries and specializing in different spaces.
Very much so. So that was one of the restructuring events that took place, is that the two businesses that were closely aligned was Digitize and Create. And what we looked to do is, and largely because Create used to build and manufacture the products that Digitize used to obviously distribute and implement in their customer base. So what we looked to do is we consolidated Digitize into Create. We're using, we're leveraging off the fixed cost base within the Create environment. And then we've obviously got a distribution arm that obviously goes and markets the Digitize product. So we felt that was more aligned to consolidating those two businesses And at the moment, it seems to be paying dividends.
Certainly, Create's got a very, very chunky looking order book, 400 odd million sitting there. Because it's manufacturing, I mean, is it long lead times, or is it a case of you've kind of done the R&D and you're out there selling what you've done, the research and development, and those lead times perhaps aren't too bad? Or is it sort of fine tuning for individual customers?
So a big part of a substantial portion of that committed order book is a contract, an overseas contract that the economic value will come over a 3-year period. Mm-hmm. So, and we are looking to kickstart that contract fairly soon. And, there will be incremental revenue during this financial year and obviously the following year and the year thereafter.
Gotcha.
But what's quite important and what's nice to see is the other order books in the homegrown markets that we operate, mainly defense and mining, that are really starting to build. We're starting to see the mining companies, they are awash with cash, and they're looking to invest in new technologies and new equipment, which falls right into our court.
Yeah, and that's the sensors, that's IoT, stopping two underground dump trucks colliding. You've also got the connect part. I mean, have you sort of seen, you've mentioned mining, a pickup there. A lot of your product would also play into the work from home. We're back in level 4 in South Africa, but have you seen a pickup in demand or interest sort of as we have moved through the pandemic and realized the new reality we face?
Very much, Simon. What's Connect order book at the moment is sitting at 178 million. Mm-hmm. So we've seen a massive uptick. Just a quick comment on obviously our customer base. The telcos who go out and look to invest in that infrastructure, they tend to invest and then they run through a process of trying to connect the homes to that infrastructure. And what we saw this business being a great beneficiary of the investment cycle up until about 2018.
Gotcha.
And then a lot of the network operators went off the boil a little bit. They were more focused on connecting the businesses and the homes to the infrastructure. And now what's happening with the work from home, we're starting to see the investment cycle return. So that's great for our business. It means, nice healthy orders, and, we're quite well positioned.
Yeah, I hear you. They kind of flipped for a while there to last mile, and now they're back to their networks. We'll leave it there. Richard Willis, he's Etienne Group Acting CEO. Richard, appreciate the time.
Business, finance and investment news. MoneyWeb Now with Simon Brown. On the Money. Also available on podcast.